Hi, everybody. Welcome back to the Comstock channel. I'm Marlon Bowling, your host, and thanks again for joining us here today. Always appreciate you joining us on these episodes. I want to remind you to like, subscribe, and share this video with anybody you think might be interested in it. And we have an ever-expanding audience. We look forward to talking with more and more people every day. Today, my guest is Paul Neiffer. A lot of folks know Paul very well as he does CPA work that's ag-related all around the country. He has a lot of tax advice and that sort of thing. And Paul, you and I have talked numerous times in the past through my work at RFD TV. And I understand you relocated. You're in Colorado now. You used to be in Washington State. Um, for the being, quickly give me an idea where you are right now, and then let's talk about the checklist for 2024 as we get ready to file our taxes.
Yeah, so I'm actually in outside of the town of Parker, Colorado, which if you flew into the Denver airport, which is on the east side of the Denver metro complex, you go about 30 miles due south. We're at about 6,600 feet of elevation, so Denver's mile high. We're another 1,400 feet above that. And if you looked out my back deck, you'd look at Pikes Peak and the whole Front Range, and we're surrounded by a 200-acre horse ranch, and we got about 6 acres ourselves. So it's pretty nice for what we want. So now, as far as the checklist, farmers, they call it the farmer due date. It's technically not a farmer due date, but it is March 1st. As long as a farmer files and pays their taxes by March 1st, they're not required to pay any estimated tax payments. Now, we have tried to get a lot of our farmers to pay that estimated tax payment on January 15th. They only have to pay one, and it's only, 2 weeks ago they'd have to pay it, because from an economic standpoint, especially with higher interest rates, it actually makes a lot more sense to pay that January 15th and then wait till April 15th to pay the rest of your tax. But we do have the March 1 deadline. Now this year, Marlon, it's a little bit more unique. We have a tax act that was passed last week. I think it was actually passed earlier this week, that has some retroactive provisions that would affect farmers' tax returns on the 2023 return, primarily dealing with bonus depreciation. So if a farmer has a lot of farm equipment that they traded in, or they built a new machine shed, et cetera, the rules now is that they can only deduct 80% of that using bonus depreciation. This tax act would actually push it back to 100% effective at the beginning of the year. So farmers need to work with their tax preparers right now to determine, hey, should I file by March 1st? Because if I file on March 1st and this act goes through, which likely wouldn't happen until after March 1st, I'm going to have to file an amended return. But is that amended return worth it? Those are the questions they really should be asking with their tax advisor. But that's sort of the key thing that's a little bit more unique this year versus in years past.
Well, if everybody's gathering up all their paperwork to head to the CPA office here this winter and this spring, what's the main checklist of things you have to make sure that you include as you take all that paperwork along?
Yeah, so the key things that you want to do, if you use, a lot of farmers now use QuickBooks, you want to print out those reports of your profit and loss, your balance sheet. There are various 1099s. So if you had collected crop insurance, you want to make sure you bring in that 1099. You might have other 1099s from the federal government as far as for ARC, PLC. Last year, a lot of farmers would have had the MRP. And so on and so forth. So you want to bring in that documentation. Also on crop insurance, and actually I was talking to my cousin about this. He had the crop insurance premium actually taken out of the proceeds. So that extra premium that was taken out, we have to make sure we add that back in as an expense. And it used to be the 1099s from the crop insurance company, they wouldn't report that on that information. So now it's much more it's much more helpful that we actually get that information so we know to put that in. There's typically the CPA or the tax preparer is going to give you an organizer that sort of takes the information you had from the previous year, and you're going to fill in that information. The more that you can document that and have that all in a nice package for the tax preparer, the better off you're going to be as far as getting your tax return filed.
So what's the most common mistake you see from people that do file taxes?
I think one of the big common mistakes I see is they get in a hurry. They want to get it done by March 1st. So they put some pressure on their CPA to get it done by March 1st. Some of the worst, I'll put that in quotes, worst tax returns are the ones that the CPA is hammering out on February 28th. This year we got February 29th. Also, I think another area where they sometimes miss it is they get too conservative. They're like, well, I know I spent money on this and it might be deductible, but I'm not going to tell my CPA about it, or I don't want to be in an audit. Review all that information with your tax preparer, because a lot of that is regular, ordinary, necessary expenses, and it's all going to be deductible. So make sure on that. Also, I think a big common mistake I see with farmers is they don't want to pay any self-employment tax. And so when they get ready to retire, they don't have any Social Security benefits coming in. What I prefer to see the farmers do is optimize their self-employment income if they can, and there's many ways of doing that. But you want to pay in some, because if you try to pay in a lot at the end, it's not going to help you very much.
I've heard the comment numerous times where if you don't pay taxes, that usually means you're not making any money.
Farmers have the unique ability to pay taxes or not pay taxes. They're on the cash method of accounting. We always want our farmers to maximize at least the 10, the 12, maybe even the next bracket, because that way you're soaking up your standard deduction. You're getting credit for your child tax credits if you have children. So there's never any reason not to pay taxes. We just want to make sure you pay the right amount of taxes. So the right amount is much better than no taxes.
All right. Any pointers as we go into 2024? Anything we need to be doing differently to get ready for next year now?
Well, I think you and I have discussed a little bit offline that likely crop prices are going to be lower this year. If crop prices are lower, that means a lot of farmers have probably stored up some grain that they haven't sold. This is the year to probably start looking at, again, optimizing their taxable income, bring in some of that grain they haven't sold in the past, and get their number to what it should be.
Paul, I really enjoyed talking with you. Thank you so much for all the information. And I would encourage anybody out there that has more questions, maybe they can get in touch with you directly too, and you can maybe help them out a little bit. Do you have a website or something where I can direct people that they can learn more information from you?
Yes, I have a blog at farmcpareport.com, so farmcpareport.com. Also, my email, and I enjoy getting questions from farmers or whoever, is farmcpa@outlook.com.
Excellent. Paul, again, thank you very much. Paul Neiffer, a well-known tax expert and CPA. He is now based in Parker, Colorado. That'll do it for this particular episode. I appreciate you joining us. For producer Brianne Hendrickson, I'm Marlon Bowling. Catch you next time on the Comstock Channel. Thanks for joining us on our Comstock YouTube channel. Don't forget, you can also find us on Facebook and TikTok as well.